Welcome back to my channel. This week's QQQ trade update is a little quieter, but next week should be more interesting. Today, I rolled my cash secured put out 7 days, generating $158 while keeping the same strike price. My covered call, which I rolled out 14 days last week, is still open and won't expire until next week, so we'll have more to talk about later. And to keep the backyard wildlife theme going, I'll also be sharing a video of a fox that showed up in my next door neighbor's backyard on Oak Island. Stick around to the end for that clip. Let's jump into the numbers and see how this trade played out. QQQ has had a little bit of a pullback today, which should make this roll easier. If you watched last week, you'll remember that I sold a cash secured put with a strike price of $510 expiring today, and I raised the strike price of the covered call to $515 and set the expiration date for February 14th, which is 7 days from today. So there's not really much to do with this, with the covered call. If we'll take a look, let's just see what the extrinsic value of it is right now. Yeah, it still has $3 a share of extrinsic value, which will erode between now and February 14th. So we'll just check in on it next week and see if we can roll it up and generate a credit with it. So let's roll out the $510 put, and I am probably going to keep the same strike price. Quick break from the trades to share something new. If you've been following my cash secured puts and covered calls and want to learn a riskier but potentially more profitable strategy, check out this book. I just published The Beginner's Guide to Bull Put Spread Options on Amazon. Now, you know I'm all about risk management and trading with the outcome in mind. So in this book, I break it all down step by step to make sure you understand the trade-offs before you jump in. I'll put a link in the video description, and you can read it on your laptop, tablet, or Kindle. And I'd love to hear what you think. Check it out and let me know in the comments. Now, back to the trade. Taking a look at the option chain for the February 14th expiration day, a 7-day contract will bring in about $150 if I keep the same strike. I could raise it to 511 and bring in a little more, but I think I'm going to keep it right at 510 and just make this an easy straight roll. It filled at $1.58 a share, so I'll add it to the spreadsheet. Now that's a very respectable 16% annualized return. I've improved this position by $156 in my cost basis, and we'll sum everything up and do a more in-depth analysis next week, and I'll see you on February 14th.